What's happening? What's happening, everybody? Welcome to the event. First things first, we're going to give a huge shout out. We're expecting a bigger turnout, but it's all good. I'm going to put on the show regardless. So thank you. We got people from Oklahoma. We got Fort Worth in the house. Plano in the house. I guess you could call it Atlanta in the house. So we're super excited to do this. So I want to thank everybody. Moby Life, of course, sponsoring the event. Shout out to Moby Life. Check out the products. The list is only growing. Well, we got 4 products back there. So thank you to the host for allowing us to do this in your beautiful home, Jacob. So cool. We're really looking to do this more often. I would love to do this every month if I could. I want to grow it to where we're in a venue of like 100 people doing this. It is that relevant. It is that important. And so I'm dedicated to this, and it's not gonna stop. So this is a currency convention, wealth investing part 2. Part 1 was at my birthday. It was a little snippet. Some of y'all was there. We had 3 people here that was there. Fun, no, 5. Yeah. So we appreciate everybody coming out, but this is part 2. It's only gonna continue. We're looking to part 3. I am Adrian Johnson, and this is the currency convention. Let's go. We have a disclaimer. Let's get through this. All the following information is for educational and entertainment purposes. I am not a professional financial advisor. There is risk involved in the stock market and investing. So be sure that you seek professional help where need be to protect yourself and your finances. All right, enough of that. A little bit about myself. Ladies and gentlemen, it is not about where you came from. Okay? As y'all see in the picture, it's not about where you come from. It's about where you going. Okay? It don't always have to be about you being in these streets like this. It's hard out there. So, you know? The cool thing about the stock market, on a serious note, there's no... It is what it is. It doesn't matter if you're black, white, Asian, Hispanic. It doesn't matter if you come from poor backgrounds, rich backgrounds. The stock market, investing does not care. The rules are the same for everybody. The playing field is the same for everybody, which means if you learn the rules, you can learn the game. So a little bit about myself. I started investing in securities in companies in June. So just about exactly a year from today is when I started my account with TD Ameritrade. Current value of $12K in assets, diversified over 20 companies. That is changing. I'm looking to drop about 5, to be honest. My portfolio consists of long-term holdings, short-term holdings, and option strategies. Options is a little bit more advanced. We're not really going to touch a little bit. We'll touch on it a little bit, but we're really going to focus on long-term and short-term holdings today. My best trade to date is NVIDIA, ticker symbol NVDA. I bought that at $146 and it's currently at $396. So that's why I put in the parentheses here. That is a gain of 165%. I'm very proud of that. That's not easy to do. Some of my goals: to become mentally unemployable and self-reliant. I'm going to talk a little bit about this because a lot of this does have to do with mindset. To be mentally unemployable means that you don't have to depend on a 9-to-5 to live your everyday life. I believe it's possible. I believe it is something that we can all accomplish within 20 years, to be quite honest. And when you think about a lifetime, that's a very small piece of a lifetime. So, grow my investment account to over $100,000 and become an expert trader. That is in long-term, short-term, and what I call day trading or scalping. Giving back by teaching others how to create wealth. And honestly, just to do more cool shit. Create more cool memories. We are professional videographers, photographers, hence why we got the camera set up. this is what we do, and I love doing cool shit. I've never been to anything like this. I had never even thought about hosting anything like this until randomly one night we was just talking, and I was like, I'm about to start fucking teaching this shit to my friends. And I'm gonna grow that shit until it's too big for me to manage on my own. And that's my goal. That's what I really want to do. As part of my why, short, simple answer or a simple word, empowerment. That's what this does. It empowers you, and you're gonna see why. I believe it's necessary to build wealth. Not an option. I believe it is necessary because we do not want to depend on jobs when we're 65 years old. Nobody in here does. And to know how to do it properly is important. I have a passion for building wealth and teaching, and I believe we should all buy back our time. I don't know if any of y'all ever heard that term before, buying back your time. But that is a thing. Teaching my family, friends, and peers how to buy back their time is a life goal and a dream of mine. So that's what I'm here to do. And I won't stop until I accomplish it. Y'all riding? Y'all ready? Let's get it. So the first question I have for you guys, I'm going to make this interactive too, so don't think it's going to be me up here talking the whole time. Why are y'all not involved in the stock market? If you are, fantastic. If you aren't, or if you're just dabbling, what is it that's caused you to be hesitant? Bring my voice down?
Hands down.
Oh.
Putting the shadow
With
on
my
your
hands.
face.
It could be a number of things. It really could be a number of things. I've talked to some of you guys about this. Maybe it's a fear of losing money. It's a very common fear. It's very understandable. We work hard for our money. You don't want to just give it to somebody and it be gone, right? That wouldn't make sense. Maybe it's a lack of experience or a lack of information. Maybe you just don't know how to get involved, you know? Where do I start? Where are the brokers? What is a brokerage? How do I buy a stock? What does it mean to even buy a stock? Maybe you got a bad relationship with money. This is probably the most important one out of all of them. This comes from our roots. It comes from our grandparents. It comes from our parents. How they used money, how they looked at money, can create a good or a bad relationship with money. Money is supposed to be used as an exchange, or it's supposed to be used to barter or to upgrade certain things, right? We're not supposed to be spending our lives, ladies and gentlemen, working 40, 50, 60 hours a week to trade our time for a dollar bill. That's a system that they've created in this country. It's why this country operates the way that it does, but that does not mean that that's the way that we're supposed to be living. And some of this stuff could be revealing. Some of you guys could be like, yeah, I know what he's talking about. But a bad relationship with money, it could be something that's happening and you didn't even know what's happening. And I'm going to ask a question here in a minute that could reveal it. Maybe you don't understand risk management. As I said in the disclaimer, there is risk involved in stocks. But ladies and gentlemen, as Jim Rohn would say, there's risk in walking out of your house every day. As we see it on the news, we just don't know. Simple as that. So being smart about the decisions that you make, even when it comes to investing, is very important. Risk management is something that should be on everybody's radar, right? So how do we get beyond all this? Once we figure out all this, if we have a problem with one of these things, what do we do, right? What's the next step? Get in the game. Simple as that. Get your feet wet. That's the only way you can learn. Almost everybody in here plays sports or was competitive in something. You can't compete if you don't get involved in the game, right? It's impossible. How can you win a championship if you never play? How can you even score a point if you never play? If you're into spelling bees, how are you going to get to the second round of the spelling bee if you can't spell the first word that they give you? You got to get involved. There's no way around it. You have to get involved, and you cannot be scared of losing money. Hence why we have risk management. Hence why we attack the information and our experience, and we eliminate this bad relationship with money and the fear of losing money, because we move with a certain idea, an ideology. What's up?
So my question to you,
Go ahead.
again, I'm always pessimistic, is I've been in a situation, I have no problem saying this, I make $20,000 a year.
Mm-hmm.
How you expect me to get in the game when I ain't got $20 in my account?
Because it starts, and I'm going to get to this, and I'm going to get to exactly how you attack this, because this is a real thing. That is a real question. That's something that I've gotten from a couple of my friends, actually. Let's get to it. First, before you get in the game, you got to learn the lingo. That's first and foremost. Part one, y'all remember that I talked about the Money Channel. Y'all remember that? Money Channel, CNBC. Y'all watch CNBC? Y'all watch CNBC?
You watch it, so we
Sometimes. Do y'all watch CNBC? You watch CNBC? I know you do. So I tested you on it. I know you do. So CNBC is the Money Channel. When you tune in, Carrie, you watch CNBC? Because Jacob got it on. Like Shayla's forced to watch it. Because if I'm up first, the TV's on and it's going on CNBC. Ain't even no discussion. We looking at money today. Every day we look and see how money's moving. It's important to get involved. You have to get involved. So, things that they talk about. Upmarket or a bullish trend. If y'all remember part one, they call it a bull. If you think about it, the best way to remember this, bulls attack with their horns, right? And when they strike, if y'all seen the Matador, what's the bull do when he catches somebody? Throw him straight up in the air with his horns. So that's how you think of a trend in this market. A bull is an uptrend. It's an uptrend. That's why they cut their horns off with the rodeo riders, because they will get jabbed, and a lot of them wouldn't make it out. So part two, number two, down market or bearish. Have y'all seen the movie Revenant? Y'all remember? Yeah. Oh my God! If you haven't seen that movie, please do yourself a service. That movie is so good. But you remember the part in that movie when Leo got into a fight with the bear?
That's the best part.
That first off, wow, how they did that. Let me stop. But if you notice in that scene, the bear is striking down on Leo, right? Down. So that's how you think of bear market. Down trends, bears, strike down. Dividend, my favorite word in the world. Money paid to owners. If you own a security, you own a stock, and they pay a dividend, they pay you money just by owning that stock. So you want to know how you can start making money in the stock market? Buy a dividend. Simple as that. Buy a stock that pays a dividend. You start making money.
Apple is a dividend, by the way.
Apple's a dividend. Microsoft's a dividend. Tesla. Tesla don't have one. Conagra Brands, Lockheed Martin, Home Depot. There's a ton of them. There's a ton of them.
Sorry.
Go ahead.
A set price? Does it let you know that it's a dividend, and is it as a set price, or does it say like, oh, I can put in $1 and come back later on with $3?
There is a way that you can fractionally buy into a stock. You don't have to buy a whole stock. Say Google is at $123, excuse me, and you only got $50 on it. You can put $50 towards Google, and it'll buy you a fraction of that stock. I don't know if that answers your question.
Would it still send you a fraction of that?
You have to own, in order to get a full dividend, you have to own a full share, because that's how it's broken down. So you own one share, you get this dividend. I'm sure you still get something if you own half of a share, but if you do the math, it'd probably be half of a dividend. That's how they do that. All right, so yield and dividend can be confused a little bit. Yield is more of an annual thing. So if you own Apple for a year, the yield is what that dollar amount or that percentage would be if you owned it for a full year. So you're going to see this. I'm going to show y'all examples. So if it's like, I'm going to forget all this, I'll show you. So peak versus trough, just how it sounds. Y'all heard of a peak of a mountain? The top versus the valley or the trough. So a peak is the high, trough is a low. This is lingo, y'all. This is lingo that you're going to hear on the Money Channel when people are talking about money. This is how they talk. Support is the price floor. Resistance is a price ceiling. And I'm going to show y'all examples. That was kind of, you got to look at some charts to understand this. Those are not so obvious, but a lot of professional traders use support and resistance levels to find price points to buy or to sell at. So that's why that's important. Y'all got me? Y'all good? Any questions? Tuned in? I like it. Everybody locked in. I like it. See, everybody that didn't show up, they missing all this great information. But it don't matter because we going to win and we going to get them here. So I got a chart for y'all. This is a 6-month chart. Now, for people who have never seen a chart before, the green candlesticks, that's what they call those. The green means price goes up. The red means price went down. So this is a 6-month chart. And each candlestick is a day. Y'all see that? So, big day right here. Little day right here. Huge day right here. See that? So my question to you guys is, because this is y'all's first pop quiz, what kind of trend are we in over this 6-month period? Are we in a bullish trend or a bearish trend? Bullish. Everybody should be saying bullish because y'all smart. That's why I invited y'all. Everybody's right. Bullish trend. Y'all see that? So if you look on the chart, the price that it opened at in the beginning of this chart is lower than the right side. Y'all know this because y'all smart, so I don't need to explain. Now this one might trip y'all up a little bit. Okay? We got some green in here. We got some red. What y'all got?
There.
Who all riding with the Bears tonight? Slashing throats. Okay. And I don't know if y'all like me, but I love a bear market. The bloodier, the better. The bloodier, the better.
So you're buying it when it's in red?
My man. The name of the whole point of buying securities is to buy low, sell high. Now, none of us in this room are doing that because we just need to be buying, and not selling anything for the next 30 years, to be quite honest. That's how you get rich. You buy and you hold. But you buy quality companies and you hold on to them. And as they get bigger and they make more money, you make more money. That's why it's important to understand how to buy companies, what you look at. So, good job. Good job. So, for Eddie, you was right on it. How do we see those numbers, right? This is a screenshot of TD Ameritrade. So, other apps, other brokerages will look different. Even TD Ameritrade looks different from my cell phone to my computer screen. Why? I don't know. But the information is all the same. The verbiage is all the same. So right here at the top, y'all with me right here? This is the current price, or was when I took the screenshot, $291.05. So if you wanted to buy one share of Home Depot stock, that's how much you're going to pay for it. Y'all got that? Down here is our PE ratio, or earnings per share. Why is this important, Adrian? Well, I'm going to tell you. PE ratio is the profits to earnings. So that's saying that's how much you would pay to earn $1 in Home Depot share. 17.71. What they call an earnings multiple is what you'll hear them say on CNBC. Okay? Not major, but that's important to know. There is a standard number, so you can get indicators of if this is too high to buy or if it's low, which is a good thing because we like buying companies on discount. Right here, annual yield. Y'all saw that on the definition sheet, the lingo sheet. So if I own one share of Home Depot for a year, it's going to pay me $8.36. Don't seem like a lot. What if you own 100 shares?
So you put $291 in the beginning.
291 where? What you say?
You said the price of the stock was $291. So
Correct.
on January I decided to put $291 into it, and then at the end of the year I'm gonna get $8.
If you owned it for a year, then the annual rate or the dollars that they would pay you for that year would be $8.36. And just the dividend. That's just the dividend. So this is aside from whatever the price does. All right? This is a good question. So you pay $291 to own a share of Home Depot today. Next week, it could be $305. See what I'm saying? It doesn't matter though. If you own it, you still are entitled to that dividend. So on the payday right here, or this expected dividend date, that's just like what all of us get from a job. That's our payday. And they tell you right there when it is. So if you want to stack up $500 real quick, boom, okay, I got till May 31st to buy these 3 shares so that I can take advantage of this dividend. People do that. They'll wait till a dividend pays out and then they'll sell it. Or they'll buy it right before a dividend happens so they get the dividend. That happens all the time. That's actually common practice.
So what day is that $291, and how long is this today, and then May 31st is?
On this day, so who got their phone on? Because I don't have mine. What's Home Depot at right now? Because I think it's at like $296, $295.
Home Depot is at $297.35.
Your boy been studying, y'all. Your boy be looking at these charts. $297, Eddie. So when I took this, which was like maybe a week and a half ago when I was doing this slide, it was at $291.05. It's at $297 right now. So if you wanted to buy a share of Home Depot, right now it's going to cost you more. But because I bought Home Depot at $180, I'm winning.
How much would you get back if you were to sell it?
Whatever your difference is from what you paid and how many shares you have.
Like you bought it at 100
So you
something.
bought it-
It's now at
So if you buy
$297.
one share at $150, you buy your second share at $160. Now you own 2 shares, but it's gonna be on a price average. So it's probably gonna be around the 155 range that you own 2 shares of whatever. If that makes sense.
So and then $291 is how much it was, and you just subtract $291 from 150, and that's the difference of the profit.
you
that
sell
you
it
get
at
back.
If you bought it at 150.
Yeah.
Yeah. If you bought it at 150 and you sell it at 291, then you gain whatever that difference is.
Right. The difference times the amount of shares that you have.
Exactly.
The only thing that's risky, I guess,
And the
risky is
amount-
games, the number going up and down.
And guys, this is what's so powerful. So somebody do this math for me right now and tell me what 150 times 8.36 is. 1,254? So you now have a part-time job from owning Apple or stock in Home Depot. They're literally paying you $1,200 a year.
to put your money in their company.
Mm-hmm.
Just because you own, bro. So you guys have to take on the responsibility. I don't want to say this the wrong way. Take on the fact that when you buy a share of a stock, a security, you are now a owner of that company. They have to report their earnings to you. Whenever they have conference meetings every year, they have to invite you and send a prospectus of what all the breakdown of what the company did, where all the funds go, what they're buying, what debt they're paying down. They send you all of that. So you now become an owner of this company. So you should be entitled if the company is doing well. As a shareholder, you damn right. I got my money in this company. I am entitled to some payout. That's where all this shit started. That's how it goes.
You get a discount on, I'm just using an example. Nike, let's say you got a share of Nike.
No, you know what? And as a Nike, because I own Nike and I own a lot of it. That's why I constantly wear Nike. That's all I fucking buy. I don't want to buy it on discount. I want people buying that shit at full price. Why? Because I'm a company, I'm a shareholder. I'm thinking of myself as a company, as a business. And as a business, I want my customers purchasing at full price. Why? Because that helps our bottom line. That's business 101. How do we get the bottom line up? Best way to do that is to not discount any of your products. Make everybody buy that shit at full price. That's why Lululemon is so cold. And a lot of y'all probably don't even know what Lululemon is. Y'all heard of Lululemon? Lululemon,
They're not sustainable.
shit. Ask the rich motherfuckers who buying that shit. The same thing they're saying about luxury homes. Guys, the only people struggling in the housing market right now are the people that are struggling with everyday bills. Rich people do not fucking care about what's going on in the housing market. They are not hurting. If anything, they're taking advantage of the tax benefits. They're going to find a way to claim some losses. Something. That's a different story. Moving on. So we got dividend right here. We got dividends on here, so you know dividend per share, and so right there is your breakdown. So if you own, y'all got it. Okay, appreciate y'all coming out, man. Love y'all. If you own a share, you're gonna get $2.09 every time they pay it out for every share that you own. That's how you get to the $8 a year. Y'all got that? Y'all good? Y'all riding? Okay, so right here we got peak and trough. You'll see right there the peak you got at the top of this pattern, or what they call a tape. A trough down here at the bottom. What you're going to see with resistance and with support is resistance tends to be around the same areas of the peaks. Troughs tend to be in the same areas of support. Now, if I was to take a ball and let's say it was a 6-foot ceiling in here and I threw the ball down as hard as I could, you think it would hit the ceiling? If it bounced off of the floor, you think it would bounce up high enough to hit the ceiling? Maybe once. Maybe once. But then momentum might die out, right? It may not hit that again. So this is the same thing that happens if you've ever looked at the frequency of music. If you've ever seen the frequency of a voice spoken or any audio, you'll notice that it looks damn near like a stock market tape. There's an ebb and flow in almost everything in life, right? There's an up and a down, a yin and yang. Same thing happens in prices of stocks. Because a lot of things happen. People could be just scared as shit one day and all of a sudden the price will drop on something. That shit happens all the time. But what you can see consistently are areas of support where it bottoms out. You'll kind of notice it may not be exact. See how these are kind of off from here to here? But they're still kind of in the same range as far as price. That 409 to that 410 range. That's really not a big gap. Same thing up here. You got resistance, and normally they'll label it resistance because just like a ceiling, if you try to go through a ceiling, you're probably going to come up with shrimp neck and get denied, and you're going to have to fall back down, right? That's why they call it resistance. So, and also, in times, resistance can then become support. So those things change. This is where looking at charts and technicals, so when you get better at your technical analysis, you start to see these things in these patterns. That's why it's important to get involved, so you get used to looking at this stuff. All right, what do we got right here? We got a bullish trend. We got a bullish trend. But hold up, Train. Isn't this an overall, would you say this is an up market or a down market if we started it from this day right here? And if we drew a line from this price point down to where it currently is that a bullish or bearish trend?
Bear. Looks pretty good.
That's bearish, ladies and gentlemen. So how the hell do we got a bull trend inside of a bear trend? This don't make no sense. It happens. It happens all the time. And these prices move so quickly. If you're ever looking at this live, like, these prices are jumping constantly up and down. Boom, 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 boom. And you have different charts. So right now this is on a 5-month chart. If I was to put this on a day chart, it probably wouldn't look so intense. Because each one of these is a day. So there's just a lot of activity. So we got a bull trend here. What we got here? I don't know if y'all saw that pop up right here. A major bearish trend. Price dropping way off.
So let me ask you this: where your yellow point starts
Mhm.
on the bear, let's say you buy there, you're gonna lose all that money, correct?
Yeah.
Right.
Yeah.
And or can you make money if you're selling?
Hell yeah, you can. Matter of fact,
Do you want to get in on the top or the low end to sell though?
see, one thing that you can do, especially when you're day trading, is to get into the habit of chasing momentum. That's where a lot of people lose a lot of money. You can't predict it. So if you get lucky enough, maybe you catch it and you're like, damn, I feel like it's gonna recover from what it lost overnight, right? So I'm buying it first thing in the morning. You go get coffee and come back, now you done lost your damn shirt. You're like, what the fuck didn't happen to the price? You know, like, it shit happens. So maybe you catch it right here. You're like, fuck it, this is as much as I can lose. I'm just gonna take this L. It might be $100, it could be 1,000, depending on what you put. So, and this is only day trading, ladies and gentlemen. So this is not long-term trading I'm talking. This is if we were to place a trade in this day and we were trying to get out of it in that same day.
Alright, I got a question.
Hold on, let me answer this real quick. So right here, you could put a stop loss B. So you'll take a L, and then you could immediately hit the sell button. And if you're patient enough, you would get back what you lost, and then some.
Like, kind of off this question, you're up there on the bearish, it just starts going down. You say you lose money, right? Alright, you lose. Can you wait until it goes back up?
You
and
definitely
start
can.
Gaining money?
You
Like,
definitely can.
That's
I've
where
done
the
that.
pull comes, right?
I'm telling you, you might have to wait
You might have to wait
2
a
weeks,
month.
a month.
I mean,
Yeah,
I
you
have
can do
my
that.
money into some businesses, and some days I'm down on my money, but I'm
But
not worried about touching it.
Yeah.
I'm
Under-
waiting to
Understand there's different forms of investing and trading. So I was responding to his question, and that's why I prompted that by saying this is only day trading that I'm talking about.
And I get that, but sometimes you kind of, if you're like, you know what, I was doing day trading, but now this stock, man, you're like, okay, let me wait 2 weeks, and then I'll go to another day to see if it's done better. Or do you sell out? Do you give up on it?
You can definitely do that. There's nothing that's saying like because you place that trade you have to get out of it in a certain amount of time. Right? Like a long-term trade or a long-term investment is still gonna be executed the same way as a 10-second trade or a scalp. Right? You gotta go buy them, boom, 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 you get out. It really boils down to what your account is like. Because if you've got a low account, you don't have a lot of money in your account, you may not be able to float it for the 2 days to come back. It may wipe you out in day 2. And then they're going to shut your account, they're going to close the trade for you, and they're probably going to be calling you. You owe us some money.
They gonna check on me?
Huh?
They're not calling to check on me?
They're not, and it's not a wellness check. Quite frankly, and to be real, This is why some people end up off the side of bridges and off the top of buildings.
Mm-hmm.
They get that call, or they know they about to get it, because they done. And could be worse, where they had 1,000 other people investment money in there with them.
Wait,
Yeah.
can you repeat what happens again?
You run out of money.
In what? For what?
No, specifically, like, so what you're saying is these people pay for whatever, and then they, and then it goes down,
Mm-hmm.
and then what the people are calling them for? What, did I miss something in here?
Okay, no. So
And they lose their money, and then what?
because this is a brokerage,
Okay.
TD Ameritrade is considered a brokerage company,
Okay.
meaning they handle, allocate, divvy out funds, money of people's accounts, right?
Yeah.
They're regulated to do so by the government, by the SEC, and all that. But if it comes to a situation to where you place a bet that you don't have the cash for,
Okay.
they're gonna come after you.
Okay.
I mean,
Yeah,
so
that's what you missed.
So you put 500 in your account, boom.
If
It starts going down. Now I'm negative 500. You already took my 500. Now I'm negative 500. It's like what do
you
I do?
better not close out that trade.
So
First
let it
off,
keep going, right? That's what
I mean, you better hope it comes back, or if it gets to the point to where they're like they put a stop to it, then they will.
Your fuck, you gotta pay them.
Yeah.
It's time to find
They're
something
gonna
else
be
to
calling
do.
you about what do you own and how much that value does your home have in equity, like them kind of calls. So we said analysis. We talking about analysis.
You said analysis.
You said analysis? I know I said analysis. So fundamental analysis and technical analysis. You understand these, guys, you're gonna be such better investors than you were today. This is very basic information, but it's very key to understanding the roots of a business, where the money's going, how it's coming in. That's more of your fundamental. So your fundamental analysis is going to be your balance sheets that we all did today, your cash flow, and income statements. So you can find information like this on Yahoo Finance. That's where I got those 2 screenshots right there. And what business is that? I don't remember what it was. I cut it out. It's not important. And technical analysis is what we were doing on the charts when we were looking at pricing and kind of following the price. Volume, another word for volume, is how much activity is going on with that particular security that day, that month, that year. And the patterns. Now, there are patterns to the tape. History, and you'll hear this a lot, history does not often repeat itself in the stock market, but it rhymes. Okay? That may not make sense to you now, but it will. There's a reason why we're never going to go back to 2008, the real estate crash. There was a lot to be learned in that. And right now we're kind of in a situation where they're talking a lot about recession, and the thing that keeps coming up is 2008. How's it going to be like how it affected us in 2008? So history doesn't repeat itself the same way, but it definitely rhymes, right? So simply, the paperwork versus the charts is the best way to understand that. Fundamental analysis is the paperwork. Technical analysis is the charts. Y'all with me? Y'all got questions? Y'all good? All right. Y'all learning something today?
Actually, yes.
Mission accomplished. So the game, ladies and gentlemen, it is a game. And just like any game, if you don't know the rules of engagement, what often happens?
You'll lose.
You take the L. Simple as that. You take the L. So it is a game. The stock market investing is a game. There are rules to it. There are regulations. There are loopholes. There are gray areas. You don't want to be in those. But keep it simple. Save money is the first step. Spend less than you bring in. And there's a reason why my golden pot of golden nuggets is sitting right next to this. If there's anything that y'all take away from today, any one piece of information, it is applying that right there. Creating the habit of paying yourself first. So if y'all remember, Brian asked that question, what if I'm struggling? I only got $50. Well, start with $25.
Mm-hmm.
Every time you get paid something, it don't matter if it's in cash, it's $20, it's a weekly paycheck, it's a commission. Pay yourself before you pay anybody. And your life will change. Am I lying, Shayla? It is empowering. It is motivating as hell. And it is, you feel like a god when you start paying yourself first and you see that thing growing.
I've learned that firsthand.
Well, when I started, it becomes addicting. It's like crack. I can't wait till I get a paycheck from somebody because I know I'm about to get broke off first. I'm not paying Uncle Sam. I'm not paying these bills. I'm not paying nothing until I get paid first, because we have to start thinking of ourselves as companies.
Stock market, you put it in your pocket, or you...
Whatever. Because here's what you do with it. What step 2 say, y'all? Buy assets. That's what you're doing with the money. That's how you really pay yourself. Is you buy assets, things that cash flow monthly or appreciate in value. Y'all see the tidbit down there at the bottom. So there's going to be some people that got a problem with this if they see this on YouTube. Homes are not assets, y'all. They're not. Homes are not. Houses are fucking liabilities. They cost you everything and pay you nothing at the end of the month. They're liabilities. They do not become assets until when, Jacob?
Till you sell it.
Till you fucking sell it. And you get that cold hard cash in your hand. Stop fucking buying houses and living in them. If you're going to buy a house, you should be buying that house to make money off of that house, so that the money that you gain in cash flow is now paying for the house that you live at. That's the way it's supposed to be done. That's how people get rich in real estate. That's how they get rich with banks, life insurance, all this shit. They pay themselves first, they buy assets with that money, and they cash flow. That is a key word. And that's why they said it on that balance sheet. Everybody's cash flow at the end of the month. For me, my shit was at $18 when I first did my balance sheet. Cash flow. I was fucking broke. Some shit had to change. And it's really revealing to see that shit, but now I feel a whole lot better, because although maybe things on the surface level haven't changed a whole lot, and a lot of y'all were in my life, like when I was doing down bad. You know, there's some people in this room that was riding with me since a long time, right? They seen the worst. And ain't a whole lot changed in my life on a day-to-day, but since I started paying myself first, that's how I got my investment account to $12,000 in a year. It can be done. The money that I pay myself with, I don't even miss. I don't miss it at all. I just learned how to live off of whatever was left. Make adjustments. But the one thing that I will do is make sure that I get paid when I get paid. That's so important, guys. You buy assets, you cash flow, and now you're able to buy back time. So remember in that first slide, I was talking about buying back time. How do we do that? Well, this is how we do that. We buy assets, we buy things that pay us money without us having to be there, without us having to spend our time, without us having to break our backs. We are getting a paycheck. The only thing that I know that does this shit, we doing it with, shout out to Moby Life, ATM machines.
You see one in the front as you
Yeah, I
come in
did.
the house.
I was like, damn.
That's a
like
whole
what's
situation. ATM machines, once you pay off the balance of an ATM, it recycles money. Vending machines, great investments, because once you pay off the machine, cash flow. Airbnbs, that's why they're so popular, because people are they got $1,300 mortgages and they're making $4,000 a month Airbnb and they're not even living there. That's cash flow. That's the game. That's what wealthy people do, and that's what we're gonna start doing. Y'all with me? So keep it simple, guys. Keep it simple. And pay yourself first. Got y'all, so y'all see that. So, what makes a good company? And we about to be done. All right. So now you know your technical analysis. You know your fundamental analysis. You know how to break down a brick, as Trap would say.
Break a brick down.
So how do we cipher? Because if you look at the Money Channel, guys, if you go research it, there's like over 60,000 companies listed on the New York Stock Exchange and the Dow and all that. There's a lot of them, and it's really hard to decipher which one is what. So first things first. If you don't know anything about that industry, don't put your money into it. It's very simple. That is the easiest way to get tripped up and lose money, is buying shit and investing in shit that you don't know nothing about. That's how. All my L's that I took in my investment account when I started were because of that reason.
Exact same.
I was buying shit because I heard it on TV. My cousin was talking about it, so I bought it. I want some of that. Whatever it is, it wasn't sound research. It wasn't sound advice. It was just a shot in the wind. So this is how some ways that we can find that. Has anybody ever heard of a moat? Or you know what I mean by when I say a competitive moat? Of course you do.
I know what a moat is.
A moat. So
Mother of all time?
mm-hmm.
Mother of all time?
There you go. Shouts to that. Shouts to all the moats. Okay, medieval times.
That's what I was
Medieval times. Medieval times, they had the water around the castle.
Exactly.
Why in the hell would anybody put water around a castle?
Just protect them.
Right. So it works in the same way. It's a competitive moat. What is it that this company does that no other company can touch them doing? The best example I can give you is Amazon. You want to do this right now? Seriously though, name a company or a business that does what Amazon does.
UPS.
As fast?
Walmart.
I don't think so.
Walmart uses Amazon.
Walmart uses Amazon.
Yeah.
Their products.
And they damn sure adopted the principle of what they do now
Definitely.
from Amazon.
2-day shipping, 1-day shipping.
That's a competitive moat, y'all.
There's nothing like Amazon. That's why they're.
And think about this. Not only that, a moat also protects you from rivals, right? So name another company that can come up and just take Amazon out.
Target.
Forget about it.
No. Even Target uses Amazon. No. If you do online shopping, I feel like everyone shops at
Walmart is better than
The
Target.
alien.
When it comes to certain.
Target.
I mean, that's about the best answer y'all heard right there.
What?
The aliens.
Yeah.
Nobody we know of
Yeah.
can touch Amazon. That's a competitive mode.
Yeah.
So, we can do this right now. Think of a brand that you really like that you feel like nobody. No, like damn. For some reason, every time I go here, every time I use this, every time I see this, it's like they just got this shit on lock. Y'all think of anybody?
Ralph Lauren.
Could be clothing. Ralph Lauren been doing it for a long time. But I tell you what, LVMH got them lit.
LVMH.
I think of Honda.
What's that?
What is that, Honda?
Time Moet Hennessy.
Honda.
Oh man.
Just any company.
Yeah.
Yeah, I mean,
Boot Barn.
Boot Bar killing it right
He's
now.
smart.
You heard this.
Controlling that, guys.
Right?
All
So,
that
okay,
that's why I
but
need
the
it.
reason I say that is because,
they own sister brands, so they got Fendi.
Yeah.
and this is what I'm talking about, guys. So if you look
You
at
buying
like,
the same thing.
because that's Ulta.
That you give yourself a competitor.
Yeah.
That's Ulta that owns Fendi.
Yeah.
Y'all been buying Rihanna product. Ain't you supporting Rihanna? Y'all supporting LVMH or Ulta. So there's competitive modes, guys. Solid profit margins compared to competitors. So he mentioned Polo, right? You can easily go search up who is a competitor to Polo, and you'll find other brands. And now that you know how to do your fundamental analysis, you can now go to Yahoo Finance. You can look at across the board the competitors, Polo, Nautica, or whoever else, right? Gap. I owned them for a little while. I don't know why, but I did. And you can compare the profit margins to these companies, and then you just pick the best one, right? Keep it simple. If you understand the market, if you use Ulta Beauty products, you understand Ulta's damn near everywhere. They make a really good product. They got sponsorships by a lot of people that I fuck with. They all look good. Yeah, I find myself, I've been buying Ulta products for 10 years. Well, damn it, maybe you should have been buying some Ulta Beauty stock and getting some of that dividend for them 10 years. You know? So ultimately, you're paying yourself.
Paying yourself, yeah.
You're paying yourself. That's why I rock Nike. And that's what you start doing when you start seeing this stuff. You're like, damn, think about how much all of us have paid Apple.
Jordan, Apple.
I mean, everybody in there, we all got iPhones?
Yep.
Everybody in there got iPhones. How many people own Apple stock? That's a problem. That's a problem. That's a problem. That's how we gotta start reversing this thing. Time-tested results. As y'all are gonna see in one of these next slides, a lot of these people been doing this for a lot longer than we've been breathing. Right? Quality service and product, like I mentioned. Every time you go to Chick-fil-A, you know you're gonna get some quality service.
And okay, bro.
Hey, I mean, even if they mess something up, you're gonna get a smile, it's gonna be pleasant, and they'll fix it.
Extra credit.
That's quality service.
I'm sorry I messed that up. I'll get it right next time.
Exactly. Or we'll just give you something for free right now. Here you go, sir. Well, I'm sorry about that.
Nah, fuck you.
I mean, even if you get that, you know what, sir? I'm sorry, I couldn't help it.
Nah, fuck you.
That's quality service.
I went through Chick-fil-A line one time and hit one of these, and they just paid for it.
Wow.
That's quality service,
Oh,
guys.
come on.
Companies, think about this though.
My pleasure.
Think about this though. You find companies like that and you see them and you buy their products all the time. And that type of stuff keeps you coming back. And that's not the only, he's not the only person they've done that for. I guarantee you that.
Because he
So-
went
You
back.
see the
Because
commercial?
he went back after that good experience that he had, and he's been
Exactly. You see,
and that.
you see the commercial.
People are
So-and-so
attracted to
bought
that.
flowers.
Yep.
It's like so-and-so bought flowers for their husband. Husband wasn't there or something, so they gave it to the Chick-fil-A worker, changed her whole day. Then that's vice versa back to the customer.
That's called marketing.
We're emotional.
That's great.
beings.
That's an investment into your consumers.
Into your
That's,
soul.
that's their business. That's their business model that shows through. It's how they train their employees
Yeah.
to make you feel. So you circle back around that line every time you go.
Like you feel comfortable sending your kids in there with the money.
All right, let me get back to this real quick.
Mhm.
So, another last lane, actively paying down debt is something that you can see on the fundamentals and on the charts. You can see where their money is going, their earnings, revenue, how much debt they have, and if it's increasing or decreasing from year to year. You can see all this on Yahoo Finance. Growth of earnings, assets, and revenue, all of that. So you get all this information together before you purchase a company. And if you're doing it properly, which I'm not, but I'm getting better at, you're comparing this to like 2 and 3 companies at a time, and it's the more you look at these balance sheets, the easier and quicker it's gonna become. You'll be able to, oh, this company's not doing well. This company's hurting right here. Boom, boom, boom. Just like anything else, with repetition, with time, it becomes second nature. All right. So, one of the plays, O Realty is a real estate investment trust that I own. It is a company that pays a dividend every month, on time, every time. That's the only reason I own that company is because I'm taking advantage of the dividend play. That's Realty Income Corp, O Realty right there. So what this company is, or excuse me, what this slide is a list of companies that have not only been paying a dividend, they've increased the dividend over a certain amount of time. So we'll start from the top. Sherwin-Williams, everybody knows Sherwin-Williams, the paint. Paint on these walls and schools that we teach at. And
Can I stop you real quick to clarify something?
yeah,
Okay, just using your realty income, or you get $3.06 for every share you owe, or for every dollar you have invested in.
that's per share per year. So yield, one of our key terms that we learned earlier, yield is what?
Yearly.
Annual. It's an annual dollar amount or percentage. In this case, I put it in both.
But you get paid monthly, you said.
Yes.
So that's broken down into 12 months.
That's a yield though. So that's annual number that you're looking at.
Okay. So you get like 50 cents a month or something?
Depends on how
I believe it's like 40 something, yeah.
Just an
Yeah.
example, Apple is
It's like
24
46,
cents
I think.
a share.
Something like, what is it, babe? Put you on the spot.
Wait, face ID work?
So actually figuring that out, but that is per share
Okay.
per year.
But earlier you did say one was on the dollar?
Say it again.
Like that was paid on the dollar invested?
You're talking about profits to earnings ratio. How much you would pay to earn $1. Yeah, that's different.
Monthly
different.
dividend is 25 cents.
25 cents. So it could be a little off.
And annual dividend
So,
yield right now is
so
5%.
every month,
So this is old.
Four shares make $1.
5.13.
Oh, 5.13. Okay.
Calculated that way.
that's what I was gonna say. So every month you get
25
that 25
cents.
cents.
If you
Like you said, if you have 4
Just the
shares, you get your dollar.
You get $1.
For $1.
Yep.
You pay $300.
So that means that means Xavier, that means that every month, O Realty, if you own 4 shares, guys, let's not get crosstalk so we can get the questions answered. If you own 4 shares of O Realty, they're paying you $1 every month in dividends.
On your $1,000 you invested,
No, that's if you own 4 shares.
$250 a share.
He's up.
I'm just saying, realty owes $250 a share. 4 shares is $1,000. So you're telling me I'm making $1 on my $1,000.
No, you can't look at it that way. Look at it at real numbers. Don't give me arbitrary.
I don't know it.
That's what I'm saying. So
Well, it's
she'd have to give you that number. Don't do arbitraries with it. It's too.
Well, then don't put realty. Just put a said company. I'm at $250 a share because we just saw $250 a minute ago. Is why I'm saying $250 is the number.
$250 is what the price of the share
It's
is.
$250
Okay.
to buy 1 share.
Right.
And using, if it was making me 25 cents a share, might pay me a dividend. And I
Right.
own 4 shares, so I have $1,000 invested.
Yes.
I'm making $1.
Yes.
Okay, that's correct. You told me
Yeah.
not to look at that, but that's
Yes. That's how you look at that.
Mhm.
correct. Okay.
So in this case, with these companies,
And my question was, that's worth it?
I think you need to
hell no, that ain't worth
You
it.
need to work in within
But
your
that's
price
why
range.
you look at these companies.
Mhm.
That's why you figure out what the dividend is. That's why you figure out what the price
To
is.
understand the
You
Mhm.
gotta make it's gotta make sense. The math has gotta math. Otherwise, it's not a good investment.
Okay.
So just like anything else, you wouldn't give Joe Blow $50 if he promised to pay you back 55 in 6 months, right?
Yeah.
That wouldn't be a good deal for me. Why would I loan you out $50 if I'm only gonna make 5 back and it's gonna take you 6 months to pay me back? Same thing here. So these are companies that are time tested and true because they increase their dividends their prices is increasing. So that means if you own the shares, you're making money by owning the shares. And they've been doing it for a long time. Sometimes 46 years straight increases, 62 years straight of increases, 68, 40, 30, all that. And these are all companies that we use. Johnson & Johnson, ADP. We all probably get paid by ADP.
So
Yeah.
basically, we're buying the share and then still getting paid for it.
Yeah.
Absolutely.
Some of them are not like that. Some
You gotta-
of them you just
Some
You gotta,
companies.
when you're dealing with dividends, you got to look at it as if you're getting paid 2 times. You're getting a dividend per share,
Price
but you're also
appreciation.
A share
getting
gain.
the increases that happen
I got you.
from
It's
the actual share
simply
itself.
put, what they
Going
call
from
that-
$100 to $200 per share will give you a $100 increase, and you'll get that 25 cent per share that you own. So you gotta look at it as if you're getting paid twice.
They'll call that price appreciation and dividend buybacks or dividend reimbursement.
So that's why people will buy the dividend, like the dividend stock, like instead of
Absolutely.
Sherwin-Williams, and then sit on it for 10 years.
When I started this slide, I own O Realty, a company that I don't really believe in long term because their fundamentals don't look great. They owe a lot of people money. And I'm only owning that stock for the dividend. I'm just,
Which is
Wouldn't
understandable.
that be a bad investment?
They pay a
Huh?
cool
Wouldn't
dividend.
that be a bad investment?
no, 'cause they're still paying me every month.
So
And I'm still benefiting from price appreciation.
That's just the risk you're taking on, right?
It's just
all
an
linear.
understanding that I have.
understand.
I may not like this company for 20 years, but I like it for the next 6 months
Okay.
because they pay me a dividend every month. And in that time, now I can research some other companies that pay a better dividend at a better PE ratio, and the money that I gained from O Realty during that time, cash that out, and I use that to go buy the company I want. That's how this game works. When you buy low, you sell high, you take those gains, which can and are taxed gains. But if you reinvest those gains back into companies, then you're never losing. Never losing. Just continue to build and build and build and build. And the compounding effect takes effect. If y'all never heard the rule of 72 in compounding, look that up. That's important to understand because it applies to this. And that's why it's super important to invest in these companies and don't fucking touch it. Don't plan on using this money towards nothing for the next 10 years. Just think of it as money that is going to grow and grow and grow, and it's only going to do that if I put it in here and I don't touch it. All right? And then you look up in 30 years, you're up 40, 50 racks. Right? That's the game. That's the game. Y'all got it? All right. So now what? Now what we do? Y'all got the game. You got the understanding. You got the know-how and the know-will. You know. Now what? Now you find a brokerage and create an account. Some of you have TD Ameritrade, TDT,
I got Fidelity.
Fidelity. They're up there too. Fidelity,
And E-Trade.
E-Trade,
Mine just switched to Schwab from TD.
Schwab, which is why I merged those. TD Ameritrade and Schwab are now merged.
They're doing it in like groups, so
Yeah.
most certain people have already switched to Schwab. They've already done me.
That's what
So
we're talking
I
about
went
the
for
other day,
TD
right?
and now I'm learning the Schwab setup because it's set up totally different.
Yep.
But
So
it's
they're
all the
doing
same
that.
information.
But it's not a bad thing, you know. They're just merging. It's two great
Yeah.
companies merging into one, so
Same
it's
information,
a good
different
thing.
setup.
I'm gonna check it.
Deposit some cash. You can set this up to like do automatic withdrawal. You can. I know on TD you can set up to where your paychecks will go straight into your investment account. I wouldn't necessarily do that unless you just got it like that and don't need that money. But you can do that. Find a company you like and buy it. That's it. Just hang on to it. And I'm gonna leave you guys with this. We feel good buying things on discount, right? Think about all the times you bought a pair of shoes, a shirt, toilet paper when it was scarce at that one time. And people, I'm not lying. Y'all remember that? People was calling people like, hey, yo, they got toilet paper over here. I need to go get some. You feel good about it. You buy it on discount. I'm about to buy like 10 rolls, so I ain't got to come back. It's discounted. A shirt, a car, a house, whatever it is. We feel good about buying all that stuff on discount. So why not buy good companies on discount that pay you money? Change the story.
Changed in there.
That's heavy on y'all, right?
Yeah.
Like leaving
You
y'all.
already know. You already know me.
Alright, guys. Thank y'all. I love y'all. I
Love
appreciate y'all's
that.
attention, man.